Morning traders that hear me and watching me. So I decided to make this video, sorry, because yesterday we were trading live with some folks, people that follow me, um, and they were a good examples of how to trade with premises. And you might wondering what it really means to trade with premises. So, in the concept of trading, there is two type of traders. One is a systematic trade that is basically a trade that is looking for use more objective elements during the trading in order to manage their own trade. Have clear say clear elements in order to take decisions, or not even take decision by themselves. It could be part of the system, it could be part of automation, it could be part of a strategy, and they just let it run. That's a systematic trade. It could be automatically, or it could be just to have a system, and you follow strictly the system. And there is another type of trade that is discretionary trades, and that discretionary trade is Al Brooks style, right? That's my style too. And basically, when you are a discretionary trader, you're looking for analyze the behavior of the market bar by bar. That's basically the words of Albrook. So bar by bar, analyzing the market. So you analyze how the market is behaving according with the context that we have. We analyze how the market is behaving according with the setup that we have in front. How we analyze how the market is behaving according with the last bar and the next bar. So that's analysis that we make in the real time, and that's what I call trading with premises. And what premises are is basically you need to analyze what the market is behaving right now versus what is expected usually. So what is expected usually is what the markets what is the most probability that the market does in a determined context, in a determined setup, right? So for example, if you have a wedge and you have a clear wedge there, you expect that the market makes two legs up or sideways or down or sideways, and that's what the market usually behaves. But if the market doesn't do that, it means that we have a failed wedge. So that's the another premise. So you need to be prepared to trade based on the premise. So usually, when you have a wedge, you expect two legs up, right? If it not, then the another side is stronger, and you need to really take quick decisions on that. So that's basically how trading what premises works. It is easy, it's not, but it's required some training. It requires a lot of study. But Al Brooks has all of this already identified in their books, in the book trading course, in the best trades course too. So you can find all those elements that can you to bring more solid knowledge on how the markets behave. So in this video, you'll find this how to set those premises for both sides. When you're setting premises, you need to think on both sides. So what the bulls wants, what the bulls will be ideal for their looks like, and what the bears are also looking for, right? So if for example you have a good signal bar, it's an H2 bull flag, so you're expecting follow through in the next bar because probabilities are that you have a good fruit. What happens if you don't have? It's start to think, well, this is not going so. It's not bulls are not so strong as we think. This is the first thing. It means that you need to exit immediately. It depends of the context. So if you are in a bull trend and a channel and you get an H2 bull flag, you can wait for the next bar of so that's the kind of things that we need to really take decisions in real time, and this video contains some of those thoughtful process. Okay, so hope you like it. Please let me know by comments if you have any questions. you need any suggestion or orientation how to get that knowledge, and please click the like button. So this is something that I'm doing just for helping people to try to shorter their learning curve. So hope you enjoyed the video. Click the like button again and share with somebody else that you might think it will need it for. It will help for you. One of the things that I also added here, and as coming from some questions that our study group had, is how to use wedges for making these premises, trading with premises. So you'll find here in this video a lot of talking about wedges in 1 minute chart and how to use it for trading management. I think that is gonna be very valuable for you. So don't miss a minute of this video because it's kind of it is kind of content you will not find it so frequently in the YouTube. So I hope you think in the same way, and please let me know your comments or questions. So let's try to make a summary of the day and why I did get this bar here, right? So but let's try to make that summary for this date, right? So can you see the screen right now, right? Okay, good. So well, bar one, I took this long here. Bar one, this is a good long here, and then we have a micro channel, but it's kind of, despite we have here a good micro gap, and it's a good micro gap, so it means that um, we have bullish pressure here, and not only that, because we have a high here, and then it kind of make a swing gap and even a micro gap here. So a couple of gaps showing, and this is a target showing a good bullish pressure here. Okay, so that's the first thing that happened. So I went here. My initial target was 5140, right? So I with this pressure, it kind of, when this 13 happens, I did take out my profit target here, and I see, this goes higher. But then we have this L1 in 12 is a good spike. 1213 is a L1. Let's put it here. This is a micro channel, right? And this is it's a good micro channel, but 7 is the one. It's a L1. It's a H1 bull flag, right? And then 13 is a double bottom bull flag. It's an H2 bull flag here with 16, right? So in terms of entries, so far we have B1 is a good entry. We have below B6, it's a good entry. Even you can get it in the close of 6 here during 8, second entry. Because if you get it here and you get out air, you have another opportunity of scalping here. And then we have the 13 is a good entry in H2 bull flag. 16 too is a good entry. And then short, we have this. I will not take in this 14. The spices L2, it is an L2, so this is an L1. It's an L1. You can choose 10 or 11. It's pretty much the same thing. And this is an L2. This is an L2. the 14. So it was trigger hitting the 15. But despite the 14, I was commenting in the Discord that I was saying that this 12 here, it makes me think on, you know, we might have some buyers here in the closest 12. So that's why this L2 was not enough for me to exit. Okay, so my stop was here below 13. So I keep it that. And then we have good 17, right? So if you wanted to bet in this breakout, you have a good 17. So you can, I don't like that kind of ball bar. So I'll, I'll recommend that bar just for being um, an H2, right? 17, a trigger of the H2. Just for that, you know, you have some sellers triggers below the closest 12, and just for that you can get this and you have a good chance of having follow through. But it was so high versus the previous swing after, you know, sideways uh, pullback, right? But then we have 19, 20, 21 going below 13. In my opinion, here we're kind of setting the stage for a trading range for the rest of the day. So, so when you have a swing like this, going below this swing on the 13 that makes a major, you know, new high, then you can think, well, this is not going so long, right? So what's happening is I did sell right after that, right? So I get out below 13.21. It just triggered me and got out, right? It was unfortunate, but I got $700 from here to here. It was kind of here or something. Yeah, 13 points, 14 points I got there. It was good, 14 points. But then I tried to sell. This is one leg, right? I tried to sell right here below 30. So below 29. What is this? This is L1. Let's say that way. This is L1. This is L2. So I tried to sell below 29 here. And that makes sense too, right? So I can sell below that. But it's coming from a new high. So that's the tricky piece, right? But we can eventually we can sell here. Let's see what's happened, right? But I took that painful stop here above 19 right here. So it was a 12-point stop. Took that stop there. Yeah, yeah. That makes sense. Well, it didn't happen, but that makes sense because you have a good spike here, bear. So, but you get, you know, we were stopped here. So I lost all this stuff. I'm pretty much the day in the break even. So let's see if I capture this. So, but let's see. Let's say that you didn't get that and that stop and see, you know, you were in the desktop and you see what's happening here. So if you get short below 29 and you have this 31 with 402 and 32, 402 and 33, you don't have to wait for taking your stop. I was not in the PC, so I was not you know, able to see that, was busy. But then when you have a 33 here, you know, failing at moving average, you need to exit or reverse above that inside bar here, for example. Okay, what setup is that? This is an L, is H2, H1 here, H2. This is a good setup. and at least to look for this high here, right? So you can get there, you can get here in 37. Those are good entries, right? And then we'll have one push up, two push ups, three push ups, wedge. So wedge here, top, okay. And again, L1 here. And again, I'll try the L2 here. The good thing regarding 53 is that it's high versus the wedge itself. It's not like this. It's versus is against the moving average. It's a little bit high, so you have room for the moving average in case so you have to exit in the break even. So that's what I did, and just before driving, I entered into this 53, right? And I'm looking for two legs down after a wedge. So the target is basically the start of the wedge is here. So we need to we see that 61 getting to the target, right? But this is just one leg here. So we still needs to see the test of this 50-minute moving average here. Right? So you can enter in the 53, you can enter below 54 or even below 57. Those are valid trades in short there. We're always looking for two legs down. So let's see how it's gonna evolve. Right, mommy. For the second leg down, it's okay to enter there. Considering this, you can make this like this, leg one, pull back, leg two, and look for this target here. It makes sense to look for this target here, close to 23. It's a good target to get there. Let's say that this is a spike and channel, right? So the start of the channel is 13 to 21, right? So it's okay to look for that for that target, mommy. Okay, below 64 is fine. We just have 1 hour more of trading. But if we have, for example, this is an L1 H1. If we have a L2 here, it's time to exit and even try to look for. This is the type of bars that we don't expect. That's a surprise. So we're looking for this kind of bar to getting out. That's a decision we need to take quickly. Out, and then let's try to get in above. So now 66 is the same bar than yesterday. Look at this beautiful bar. 66 started with the party yesterday. I don't know what's gonna happen today, but it's a good H2. Right? So my stop below that bar. You can put it below 61 if you wanted to. It's 10 points. But we might have, buyers in the close of 65 eventually, buyers in the close 61. So you have a couple of supports here that make your stop sustainable. So what you're looking for here is essentially, let's say that this is the first leg and this is the second leg, and then we're looking for the trend resumption in the third leg. So we'll make this right here, right? And this will be the channel line, right? So The first target that you always look for the bar like this is a beautiful bar, is a one-on-one with that bar. It makes totally sense to get there, right? It's new high, so we might have taking profit activity about this, and this is a 150 that was kind of target that I think the shark was telling us today this morning. Yeah, there is there is a there is a good here. Look at this micro gap here, so this is a good target in there. This is the only micro gap open in this leg. So we have a good opportunity to close that micro gap in 150, something like this. Right, let's see. Again, the ideal follow through of this 66 is about like 67, of course, right? But if we have just a good dodgy, would be great. It's enough. Dodgy bull, right? So that's the minimum follow through we can expect. Right? What's happening if we have a bear bar like this that is right now showing up? Again, we have the close of 65 where we can get some buyers. Close of 61 where we can get more buyers even, right? So we have some buyers some sellers trapped out here, so they might want to exit. Or even we can see what's happening in the 50% right now. So let's say that this guy is starting to sell here, um, starting to buy here. So it goes below 50% if we consider all that. And if we consider just the 66, 67 is failing in the 50% of the 66. So if the bulls are strong, this bar will be bought. If we let this as a 50% of the goes up 50%, so 50% is here of this leg. So we're fine. I think that we're gonna get a good bull bar here, 68. So what's the target here? We have this channel now here. It's looking more sense, this channel now. It's looking more sense. It's better. Spike and channel. We have, let's say that we have one, two, three. Or just one in the channel, one, two, and then the third legs up. There is like yesterday, for example, we have this channel yesterday. pretty much the same thing, right? And then we have trending line here, channel line breakout here. So if we consider this move as a wedge fail, right? Wedge started 1, 2, and 3. We should make this up. Was there? 184, 80 was. So it was there. So that target was gone yesterday. ATR is 3.79, so it gets lower. But then we're getting into the final show, right? End of the day. I'll try to make something like this. Let's measure move up by 163. This is also an expanding triangle here. Could be just another shoot. We go there also as a channel line. So it's not perfect this channel, so we can have overshoot over these lines here. You can also think that this resistance here is due to the daily chart moving average test. Right, as we were here, it's normal to get here in the moving average sellers, right? So then we can have this kind of price action when we're failing. We think that it's failing, but it's basically the reaction or testing the moving average in the daily chart. It makes that some traders uh, make taking take profits there, but also position themselves on shorting in the moving average, right? But for another side, this bar here, we're triggering an H2, H1, H2 in the daily chart. It's a good setup for buying. They could go further, far if the if we got a good breakup over this 50 bar 50, right? It goes to test here 5243, for example, not today, but this tomorrow probably, and on Monday. Well, you can stay out if you want it. So I'm still thinking that that 66 is a good spike. Start off with a good spike. So let's see. Bar 70, 70, 81. So let's see if we can get 10 points here or so. We're great to close the week. A good thing about broad channels is or spike and channels, and we have this broad channel with a good amplitude. If you want to, this L2 gets you get 10 points here. What's great, right? So from here, that's a good entry to the new height. That is the way that you need to exit new height. You get 9.5 points. So it's good points up and down. These I will not take this 20, especially because this 17, 18, 19. But that was the test on the first test on the moving average. And the second test here. We are in a 1 minute short. Let's see. This is 1 minute short. It's looking some way strange here. 1 minute looks like a lack of liquidity or something. You see gaps down, gaps, bar gaps. It's really strange right now. Anyway, this is a micro wedge here. 1 minute short. And this could be a wedge up here. All breakouts in 5 minutes is a failed wedge in 1 minute or so. So here you might have a wedge in 1 minute. Here you have a wedge in 1 minute, wedge bottom here. So signal bar decent. Let's see. 70 is a good bull bar. Above that bar, it's gonna break out this flag. See, it's kind of you can make it here trending line like this. And then above that trending line is gonna be a breakout, bull flag breakout. You still are not long, for example, above that 70 will be okay to get long. See, this is a breakout of flag, so we have a good chance that this 71 will close bull. I was saying, I was short in L2 53. So what you're looking is when you have this sequence of bars, micro channel of 9 bars or so, 8 bars, then you're looking for the second leg down. 63, 64, 65 started the second leg down. And it was long here, short, sorry. When it 66 came up, it basically killed the two legs down that could goes here. So this state changed the game for this is now H2, right? So H1, H2. So this H2 is a great entry long, just to get in the end of the day, right? So here, remember yesterday we had 66 started the end of the day, couple of legs and the end of the day, like this. Here's 66, great bar, couple of legs up, right? So at the end of the day, we also have to have some kind of those peaks, right? So basically. What we could have here is that we are in a spike and channel, so good channel here. So we have this golden line here. Uh, Golden line here, and then we can go this as a target. We have a micro gap in the daily chart in 5150. So this area here is a good area to close the day, for example, right? So that's one thing. Um, so as we are in the end of the day, we expect 7081 bars. So to have kind of directional heading into these targets here in 15150 at least, right? That's basically that. As support, you have the close of 65. You have trapped sellers here below 65. You have close to 61. You have these sellers 61 or even 60, 61s trapped out by this 62, but probably they get out in 66, right? Is the most probably, but the 66 also trapped out more sellers here, right? So that's basically that. Do we have a wedge here, 62, 66, 61? You can see that way, yes. 71, I don't know, you have more space up. You know, you took this two, you have a space for making 101 of 71. So you have to wait to test this line here. But this just is a wedge, could be a wedge double top. Yeah, it's a good setup there. Sure it is. We see in the 1 minute chart, we also have a micro wedge already here. Look at this. One, two, three. It's a micro wedge, but this micro wedge here. One, two, three. Right? So what's happening is if we have a breakout of that line now above 71, the price will accelerate at least to test and make a new high. That's what could happen. So let's see what's happening here. You see here we have an L1 already in 1 minute chart here, and this could be an L2, right? But it was not triggered yet. Let's see. And I was telling that, any acceleration of the price or breakout or climax is because we are breaking out channel line in the lower time frame. So if you see, for example, if 71 were triggered and close above that, we're gonna get acceleration up. Well, we see in the 1 minute chart, it's a failure of this wedge. So this bar, in theory, might have followed through. So that's what you don't like to have, right? So we can wait for this bar to close, but it's not a good bar for what you're looking for. So you can even think on exit, but you have follow through of this bar, it's game over. It's game over because you will need two legs down here. You will get two legs down here. Probably it's not gonna go below this 66, but it's gonna be two legs down. So you can be your stop can be here, but you don't know. It could go, you know, lower, and that's it. But then if this bar is bought, no follow through this bar in the moving average is bought, we might have a good chance to at least revisit the height of 72 and go up. Let's see. Now we have one leg pull back, second leg, right? So in the 1 minute chart, you have the wedge and you could have one leg, second leg, testing the trending line here or breaking out this trending line. So this bar is not looking good, right? So let's see how it's closed, but essentially this bar is a gain over for what I'm looking for. It exit below that bar. And at the same time, we can sell that one or the follow through. Out and then selling. Let's try to get this. Let's see. So follow through in 74. So I expecting more bears now. I don't expect that 75 go above 74. So that 75 will accelerate down. So we could have some buyers in the close of 76. If not, we're fine. All right, this is how you can use 1 minute. Now wedge stop in 1 minute there. Faded wedge here, micro wedge that can lead you for a great swing. So now what I'm expecting in a second leg down from this one. So basically that, okay? So we have a micro gap here, trading range probably. This is a lower high major trend reversal. This is an entry of low high major trend reversal. So it could go even to close to the open of the day. Right? We have five bars to go. But we have this low of 21 with, I will say that it's gonna go there with a good probability. This this micro gap I think is gonna be closed with a good probability too. And I would say that's gonna be more low probability goes there to the open of the day. So 75 closed below 65 and 61 that were the point that I told you that could be supports. We might have buyers there, but we didn't have buyers, right? So we didn't have buyers. What is going to happen with this bar here? It's going to be sell, I think. This bar trends to have at least a tail above. Then in the 50%, if these guys are buying again, right, they're going to get out in the 50%. And they get out here below 74 at last. If it didn't go there, this is kind of, could be a breakup of the channel line, the trending line here, and a breakout pullback here and get it down. Could be a double bottom, but it's a three good bear bars, so we need to trust in the spike. So 50% we should find here at EMA. 50% it makes total sense here below 74. We should find sellers there. Signal bar in the moving average. This bar trends to be sold. So trends to be sold. This 76. At least to test the close of 75. So I don't expect bars going up. That's not what I'm looking. So my stop at break even. That's the right things to do here. Because if we have bars above this in the 1 minute, this moving average means that they're gonna push the price up. If you're not short yet, this bar is a good bar to fade, for example. This is a breakout pullback probably. Above that bar is a failure breakout. Right. Now I was on mute. So I was saying that now we need to see what's happening in the close to 75, right? If we have buyers in the close 75, there's a micro double bottom, and then we could have a case for bulls. But it still needs to go above 76. If with this bar close bearish, right below, the best thing is closing below 75. That's the ideal one. But if not, and it's still there, you have a bearish bar here in the 1 minute chart, we're still fine on being short. Okay. In any case, your premise, your short premise, just get out above 76. Yeah. Just it's over above 76 at this time. And this is an inside bar, and this seems that it's gonna close as inside bar too. It's a good bar, 77. Below that bar, we don't know what we could have below. We can have buyers of 75 trying to exit, or we can have just acceleration down. So it's in that case, if you want to be long, you need to be wait for confirmation that there's sellers in the close of 75. Looking that it's accelerating now. So it's a breakout pullback in the 50%. You see here clearly 50% and breakout pullback. That's great. Great price action so far. So if we go to this 50%, another thing that you need to see is where it goes if it goes to the second leg down. Right, so let me put here. We could go here, right, to this area. So 5126, 27. So this target is a good target. It's a target of high probability to have like one like between 60% of the time you have, or more than 60% of the time, you have like one like two. Especially when we are breaking out this trending line here, it could go even far, right? So, but we are in the bar number 76, 8, 9, right? So we have a couple of more bars. This is also end of the day profit taking price action. 78, we have 79, 80, and 81. One thing that is important, you remember that I put my stop below 71. If I keep my stop, I will be stop it out here, 10 points. So what I did is 73, didn't fill my premise. I did get out below 73. So 2.5 points versus 10 points here. That's why it's useful to have a premise and use 1 minute chart to try to verify that premise. And then you can save some money, of course, if you want. You can save some money if you were not stop it out full, and second, you can get into the trade in the right moment. So below 73 is a good entry short, even if you are not short, right? So it's a good entry short, 73. So you don't lose the chance, the opportunity to be short when you use premises like using 1 minute chart like this, right? So coming back to 1 minute chart here, we see three consecutive bull bars. We're still within that bar that was the starting of this 78, right? What we see here, we have a new low here, new low, and then taking profit again in 1 minute chart. It's not good, but it's still bearish. So we might see this 78 closing bear still, right? That 78 looks climatic, or look at the you know the bulls are giving up at this time, or they are looking for a best location to finish the taking profit the taking profit process there right now. They were buying all the whole day, buying, right? And then they are taking profit here. But it could go in the middle, right? So the middle is a good It's also a good point to see. Middle is something like, yeah, 21 here. Close of yesterday. This is a good target. So we have here leg one, leg two. We have the middle of the day. We have close of yesterday. This area here is the start of the channel. It's a great target here. Okay. Probably I get out once it's been tested here. As we have this micro gap here that is a magnet, we could have even overshoot of this 21 here and to try to fill out this gap here too. Not good follow through, but say that that's okay. And probably we'll have the two legs down. Let me see. Let's see here. No, we still have room for the second leg down. So let's wait for this bar. We'll see what's really happened. This is still a macro channel. Despite we have one leg, two legs down, it's still a micro channel. So now we have even a micro gap open there. So let's wait what's happening with this bar, 780. It's pretty much the last bar of the day. Right? I'll say that this 21 is looking good for being tested there. Yeah, but after bar 21 is more trading range price action. Right after bar 21 goes below 13. Regarding if you enter along above 16, do you exit after bar 21? Certainly, I will look for exiting. Yes, yes. If you get above 16, that I told you that was an H2 bull flag, and you see 21, your stop. First of all, your stop should be below 17, because below 17, your premise is gone at this time. So you took, or your stop just stopped below 16, or you took your stop below 13, right? But if you put your stop below 17, you should be fine in terms of, you know, um, in terms of um, in terms of being, that's the right way to manage, because you are trading thinking that 13 is the start of the channel, right? So if you are looking at spike and channel in 13 make 17 make a new high. So it is a channel. You don't want, for example, bars breaking out this trending line here. So on 21, broke out that trending line. What you want is, below 17, or, in the close of 15, for example, at least, or here, about how it was yesterday, you want is a new third legs up here, making a new high in this blue line, right? Know what's happening here in 21. So when 21 happen, it's not more likely to have a new high that we have here in 43. That's why I went short in 29, right? It's more likely to have something like 73 and going down, right? But okay, so we have this new high, but you see here, it was kind of overlapping, right? So in that sense, you can sell above 19, with limit order, and just wait. Well, guys, here 80, we have 7 points there. I'm gonna move my stop above 80, and that's it for me. If we got a good 81, looking for the closest below 79 would be great. You see here in 1 minute that we have a space until moving average 1,451.32.50. So my stop is where the moving average is. So you can use even put it a little bit higher in order that don't be triggered if so. Don't be, yeah, right. So that's basically the way. So let's see. I don't think that we're gonna have more acceleration down. It's just taking profit. So let's see if we have a follow through of 80. Um, I'm trying to get out. Well, guys, I'm exiting here in this bar. Out. What I showed here was how to use wedges in 1 minute chart to anticipate choosing higher lows to print the line. To draw the line, you say? Yeah, well, what is a perfect wedge? Let me tell you. What is a perfect wedge is when you have the channel line. This is the channel line that, when you are in the broad the bull channel, the channel line is passing up, passing up trend. When you are in a bear channel like this, the channel line is passing below, right? So what's happening is, what is a perfect wedge? When you have something like this, this is the channel line here, one, two touches, right? And then the third touch here, right? That's a perfect wedge. When in the 1 minute chart, you see a perfect wedge here. You see here? One, two, three, perfect wedge. Try to break out and fail. So why is this important, a perfect wedge? Because you can, if you are with the, you are thinking that it's gonna have a lower high here, right? At the end of the day, you can even get short putting a, drawing this line and putting a limit order here, for example. Or you wait for this bar, the signal bar, and you will get the retraction like this, sell this bar here, or sell below this bar here, or wait for the breakup of the flag, right? So are the three ways to enter. You enter here with limit order. You enter here in the signal bar. You enter here in the breakup of the flag. That's what I did, right? So what I did was, this is a 1, 2, 3 pushes down. This could be another wedge here, right? And then I wait for, breaking out this low here and get short. That's how you can trade wedges, right? For example, here in 1 minute chart, you see here clearly 1, 2, 3. This is a perfect wedge. And how you can trade trade this is basically, you can buy here, right, in the line. So you put a limit order in the line, and you see to the left, right? This is a II kind of II here, so it's a good reversal pattern. So you can buy here, that's a signal bar. You can buy here about this bar, both this bar, or you can wait for the trending line breakout. That's happening here. So you buy here. You see? So that's a way to do it. And then it makes another wedge flag here, you see? That was not perfect, right? That was not perfect. Then you cannot capture this one here. And that makes sense because you're coming from a spike. So, but then you have this beautiful setup here, swing here. Or you can buy this one. But those are 1 minute patterns. So you buy here, you need to really be careful because it's a 1 minute pattern, so it's behave for 1 minute. So 1, 2, 3, you can exit here, for example, or here below from this long here. So that's the way that I use wedge in the 1 minute chart. But it's not in the 1 minute chart that you're gonna get all the wedges. It depends on what depends on what's really happening in 5 minute chart. This is really useful when you are in a trend, for example. So when you're in a trend, let's say here, for example, here. I was saying this morning, we're trending, and I'm looking into 1 minute chart. So let's say what's happening there during the beginning of the day to see how to use it. For example, this is for free, my friends, right? But look at this. All right, it's 9:30, right? Something like that. No, it's 10:30. Yeah, 10:30 here. My time. It's here. So this is, look at this. This is B1. You see this, you have here channel line. You see there, you have here another channel line. Couple of wedges here, right? So B1 is a failure, it's a wedge here. That's why I bought it, because I was seeing that wedge in the 1 minute chart. Then B1 is that. Then you have this couple of bars here, and that's the retraction of this bar too. So I bought this one here. I bought this here in the moving average. That was the first bought that I did. See? So you have a wedge, and then let's say that I bought here during here during this bar. Okay? So I bought a signal bar here above moving average. And then you have this trending line here, right? And this beautiful bar breaking it out. So you buy here in the 1 minute. Then you have this OB here in the, failing on moving average. It started to trend here. Here it started to trend. So each time that is coming to the moving average, you can buy. You can buy here, but this didn't touch. If you put your, you can buy here, but you can buy this for sure, this one. When the market is trending, so you don't need a wedge to buy, because you need to buy you can buy even this one, you can buy that one here. And then you have this one here, then it's not more trending, this spike. So it's no more trending, you stop to use 1 minute chart for entering to the moving average, because it's gonna be this mass here. But then you can trade this like a trading range. For example, you say, oh, trading range, this is a wedge, I'm getting short here. So you can get short here. What is the target of the wedge here? It goes sweet here. Right? Look at this. Then you have another wedge here. You can do it like this. Right? You can get short here, get two couple of legs down, looking for this. It goes there. Right? Then here started to trending again. And you see all the fails in the moving average. So you can get long here, for example. Let me put it bigger here. Right? You could get long here in a H2, beautiful. This one you can get long here, and then you have another perfect wedge here. Look at this. See, this is an entry short here. If you put your stop above this, no issues. This is a lower high major turn reversal in 1 minute chart, right? That would be a couple legs down in. And then you have this beautiful wedge that I already showed you, right? And that's it. Then you goes there. So this is the another wedge. You see that? So, but this is trending behavior, and this is more trading range behavior. It's different the way you can, for example, this in this case here, you see a pattern. What is the pattern? This is a triangle here. It's different than trading wedges. This is a triangle, so you trade a triangle, right? This is another triangle here. See here. So it's a trade up here. So overlapped is not so good. It's trading range here. Well, that's it, I think, guys. Okay, that's the way that you can draw some wedges. So wedges are channel lines above for the bull channels, um, and for the bear channels is channel lines below, right? Please don't use this if you're not familiar with, because it could really hurt you. If you are always trusting 1 minute wedge, it's not so good. Okay, so you need to really be conscious or on the context in 5 minute chart before taking those. If you are, for example, in a trading range or in a limit order market, like for example we had at the beginning of the day in ETH, that will be really difficult to get because there is a lot of overshoots, for both sides, and you can find a good entry, right? So you can find a good entry. So have a good weekend, guys, and see you next week.